Okay, good morning, everybody, and welcome to the Gulf Intelligence Daily Energy Markets Forum, where each day we take stock on the open in Asia. Looks like the market's popping up again this morning. Nothing dramatic, it has to be said, but nonetheless, the back of this OPEC turmoil, prices seem to want to rise, at least in the short term. Let's leapfrog over to Sydney, Australia, with Peter McGuire, CEO of XM Australia. Peter, from a market perspective, what's at stake at this moment, this Tuesday morning?
Well, good morning, Sean. Good morning, panelists. What's at store is that we're approaching 80 with a a great degree of horsepower, Sean. So there's this first side as far as from a trading perspective. Very, very bullish. I think the undertones are there, and I'm seeing NYMEX is 76.70. So you've got and closing very closely on Brent. So the momentum there, US dollar still sitting at that 92.2 handle. I think could be a little bit of further softness for that dollar, so that could even push crude up a little bit closer. And I won't be surprised to take an $80 handle out for Brent this week.
Peter, ultimately, is this as I put it on Twitter, is this a bear in bull's clothing, that the initial reaction is clearly bullish, but for a market that's a managed supply market propped up by keeping 6 million barrels on the sidelines, if you've got fallout, it can't be bullish, can it?
Well, I think you're probably right, Sean. I think it's probably a little bit exhausted when you're thinking about what the headline's going to be. There's so much hurt going on with developing nations and the emerging economies, and inflation sitting where it is. Everything's up except wages. So in turn, there's a lot of hurt on Main Street. The second part of the journey is that I think 80, 81, 82 bucks would just about pull it up. I think OPEC are very mindful of it and that consideration. So I think we're nearly at the tail end of a bull market. And as you said, we could see I'm not saying a significant correction to the downside, but you could strip out $5 or $10 real quick.
Peter, meanwhile, back at the ranch of demand, our good friends in China seem to be stumbling a little bit as we go into the second half of the year. We have China's services sector reporting yesterday they've expanded at the slowest pace in 14 months in June, with the sort of PMI business activity dropping to 50.3 from 55.1, which is a significant pullback. Your thoughts on what's going on in China and the outlook for the second half of the year?
Well, the first off, Sean, and yes, it's a big wind back, but the Chinese economy, what we've seen as far as equity markets, they've been very, very bullish. So is that momentum going to stay to every trader's delight on that, the big bull market, or is we going to see some sort of disruption? And that just has to play out over the next couple of months, how Asia positions itself as far as equity markets. The second part is demand. Well, the global demand, they're saying, is going to increase by considerably, about 5 million barrels a day over the second half of the year versus the first half. So the demand picture, someone somewhere is using it, Sean. I'd say that China's probably at the top of the ladder, and the demand picture is going to be, I think, fairly strong leading into 22. If we're coming out of lockdowns, I hear what Johnson said this morning, Boris that is, and the UK seems to be ratcheting up. US, everyone seems to be coming out of lockdowns. Europe. So in turn, from a demand side, I think it's going to be fairly rosy leading into the next 1 or 2 quarters, as long as we don't see a return to lockdown, Sean.
Even on that point, I mean, we were talking last week that even at 400,000 a barrel a day increase per month, it was likely to get to 80. Your thoughts on Robin's assessment that in itself was probably a low figure given the demand recovery that we're talking about in the second half of the year?
Well, I think if we put our minds back a couple of weeks ago when we've been, chatting with GI on our weekly or bi-weekly commentary, 80 was really the handle that everyone thought was possibly an achievable, and how soon are we going to get there? And here we are, we're sitting here on the 6th of July and we're only $2.50 out. So we could easily be there. Many analysts were saying possibly by the end of July or moving into August. So we're probably ahead of the curve. I think it's just a wait and see, but I think that overall momentum is to the upside at the moment due to the brinkmanship being played out between UAE and Saudi. So I think that's enough to add a couple more bucks on it quickly, Sean.
Let's go to the survey question and give everybody in the room a chance to comment on this theme. In a market that is built on a house of managed supply cards, is OPEC plus fallout bullish or bearish for oil prices if it lasts weeks rather than days? Welcome your thoughts on that. Is this bullish or bearish if it lasts weeks rather than days? And let's go around the table. Peter, we've had the U.S. Biden administration for the first time mention OPEC in a sentence. Nonetheless, it's got his attention or the administration's attention, i.e., sort this out. Do you think that brings any bearing? Is this oil price starting to get to a level that is of concern to even the U.S. economic recovery? We're seeing gasoline prices across America during the summer driving season at close to $4 a gallon.
Yeah, exactly right, Sean. That's the hurt and that's the pain that Main Street is feeling. So whilst producers are rubbing their hands with glee, the consumers are really hemorrhaged a little with $4 a gallon. And that's, I think, not what Biden administration want for the US consumer. And they're, I think, realizing, the new Green Deal and what's happened as far as shale and all of that. I mean, that's got to turn back on to some extent. You would think that these guys would be also rubbing their hands with glee, thinking, well, hang on, we've got to really start, making some good money out of this.
Peter, looking at just the other issues resonating in Asia, before we came on, we were just chatting about the resurgence of the next wave of COVID infections, obviously Australia included. Vaccination rates continue to be quite disappointing across Asia. What's your outlook for the balance between those two things, more infection sort of breakouts and the vaccination rate remaining relatively low?
Well, I'll go to the vaccination first, Sean. There's hesitancy across Australia, but maybe it's only too early, but there is a degree of hesitancy. There's a degree of hesitancy in some parts of Asia. So there's that's how that plays out. No one really knows. And I think as the year rolls on, more people will be putting their arm up for the jab, but it's just very much, again, a work in progress.
Just on that point, is there a kind of a public sort of campaign to encourage people to take the vaccine? I suppose when infection rates are so low and you lock down just when you've got 10 or 20, I mean, we live every day here in the UAE with 2,000-3,000 and that's sort of part of normal life.
Yeah, very much so, Sean, because Australia's been quite unique, and certainly the East Coast, Sydney, Melbourne and Brisbane. Sydney, we had a lockdown last year for a month or two, and then this is our second week of a lockdown. So it really hasn't affected us. And I've got to say, no one's really walking around with masks on. I live at the beach here and I look over there's the Pacific. People are out there walking now. If it's a lockdown, then it's a lockdown. But really, I don't think it's really having a great impact to our domestic economy. So there's the first part. The second one is how that rolls forward. The uncertainty, again, economic recovery. These are uncharted waters, Sean. We've got equity markets at all-time highs. We've got crude going very, very well for producers. We've got the US dollar still sitting at 92, interest rates record lows. Everyone's rubbing, again, traders are having a dynamite time over the last 3 to 4 months. And I think that will continue for the next 3 or 4 with, again, plenty of opportunities.
Let's wrap it up there. I think it'd be also interesting to pay attention today with the US markets back open after the July 4th holiday weekend, because I think so far the market response to this impasse has been relatively subdued. Okay, we're moving slowly but surely up to 80, but I think we were doing that anyway. But if the markets open in the US today and take any kind of a more dramatic reaction to the news of OPEC's fallout, then perhaps that brings a bit of pressure for immediate issue to be dealing with this issue on a more immediate basis. Otherwise, I think we're going to have to wait till the August 1st meeting to see this solved. Thanks, Peter. Really appreciate you joining us from Sydney. Robin, as always, from Dubai, and Omar from Bahrain. Thanks, everybody, and have a great day. We'll catch up in the coming days. All the best. Thank you.